Hi, this is Dan Encell, Berkshire Hathaway. Today is Friday, July 13th. It's been quite a while since we've done one of these videos, but between the fire and the floods and moving offices, it's just been a very busy time here. So we're back on track, and let's talk about what's happening for the first 6 months of 2018. Nationwide, inventory levels are still low. They're too low. That's the biggest problem out there in the market. So inventory levels have declined year over year for the last 75 straight months. They're down about 6% compared to a year ago, and there's just not enough housing out there to satisfy the demand. So the lack of inventory has led to about a 3% decline in the number of sales so far this year. So it's been a combination of lack of inventory and also affordability. Interest rates are much higher than they were a year ago. Right now, 30-year fixed are hovering right around 5%. And then also, prices are higher. So basically, you have higher prices and higher interest rates. So it's a real affordability issue for the buyers there. Despite that, prices have gone up. So the median sales price is currently at an all-time high nationwide. It's up about 5% compared to a year ago. So just a quick recap. Inventory levels down about 6% compared to a year ago. Number of sales down about 3% compared to a year ago. And prices up about 5% compared to a year ago. What's happening locally in Santa Barbara area? So we're not seeing the same shortage of inventory that the rest of the nation seems to be experiencing. Our inventory levels are actually up a bit. Despite the increase in inventory, number of sales is down about 7% compared to a year ago there. So prices relatively unchanged. Average sales price is about the same as it was a year ago. Median sale price is up a little bit, but again, not very dramatic. What's happening in Montecito? So after the fire and the debris flow, January, February, very, very slow. It was hard to even get around in Montecito, much less sell real estate. So those months were pretty slow. So the first 6 months of the year, we're seeing the number of sales down about 28% compared to a year ago. That's not that unusual considering that, again, it just wasn't accessible and we had several hundred homes that were damaged and just aren't part of the inventory level out there. Prices, surprisingly resilient on the average sales price. It's almost unchanged compared to a year ago. That, though, is due to a lot of high-end sales. So Montecito's seen more high-end sales so far this year than we had all of last year. In fact, during the first 6 months of this year, we've seen the second and third largest sales ever in Montecito. So there's a $35 million sale on East Valley Road, and then just recently a $34 million closed sale up on Hidden Valley Lane there. So those big sales are helping the average quite a bit. Going forward, it looks like we're back to a more stable market right now, so I would expect our third quarter statistics to be fairly similar to where we were last year. Again, we're getting our inventory levels back up a bit. Prices seem pretty consistent with where they were last year, and the number of sales is climbing back to get close to where we were during last year. So that is the summary for the first 6 months of 2018.